Today's webinar is a unique opportunity for us to interact with our special guests, the CEO and CFO of one of the most eminent companies in the field of microfinancing in India, MUTHOOT MICROFIN Limited, the microfinance arm of MUTHOOT Papajan Group, which is one of the leading and fast-growing microfinance institutions in India. The company focuses on providing microloans to women entrepreneurs, especially in rural regions of India. Now, without any further delay, let me take the privilege to introduce our esteemed guest, the force behind this company, Mr. Sadaf Sayeed, the Chief Executive Officer. Mr. Sadaf is the founding CEO of MUTHOOT MICROFIN Limited since the start of the business in 2010. Mr. Sayeed has led MUTHOOT MICROFIN Limited to become the third largest NBFC-MFI in the country, managing over 8,000 crores AUM, catering to more than 2.5 million rural households, having 9,500 employees and more than 150 branches across 18 states. Under Mr. Sadaf's leadership, MUTHOOT MICROFIN has been recognized as Great Place to Work for 4 consecutive years. The organization has also been ranked among the top 30 places to work in BFSI industry in India. MUTHOOT MICROFIN Limited has won many prestigious awards, including Golden Peacock Business Excellence Award. He has hands-on experience in policy making, credit administration, operations, and risk management, with extensive experience in retail lending business and core competencies in unsecured small and large loans. He has rich and extensive knowledge in various financial and accounting matters, including financial management. Along with him, we have Mr. Praveen T, who is the Chief Financial Officer of MUTHOOT MICROFIN Limited. He has been associated with MUTHOOT Papajan Group for the last 10 years and is serving as a Chief Financial Officer for the last 6 years. He is a member of Institute of Chartered Accountants of India with over a decade of experience in finance, accounts management reporting, and compliance. He has been the helm of MUTHOOT MICROFIN's finance and accounts department, guiding the organization through various milestones, including private equity investments and diversified fundraising campaigns. His experience entails of working in financial service industry, spearheading the entire strategic finance and accounts, management reporting, and operations management, with consistent record of delivering results over performances. A warm welcome to both Sadaf and Praveen. Thank you for joining us today and taking your time out of your schedule to interact with our viewers.
The company that we represent today is MUTHOOT MICROFIN, which is a microfinance arm of MUTHOOT Papajan Group. We have a subsidiary of MUTHOOT FinCorp, where 60% of the shares are held by MUTHOOT FinCorp, around 10.8% is held by the family in the individual capacity, and that makes it 70% held by the promoter, and around 9% is held by a private equity firm based out of Chicago called Creation Investments. And we have another private equity investor based out of London, Greater Pacific Capital. They hold around 16.7% stake into the company. Why we are different from any other microfinance company is that we are looking at the customer as a life cycle needs of the customer point of view. We are focusing on low income households, lower middle and low income household. And if you look at all our group companies, we are dedicatedly focused at the bottom of the pyramid. Be it microfinance, be it MUTHOOT FinCorp, which is providing gold, or be it capital services, which is providing loans, or MUTHOOT Housing Finance. Typically, our target segment of customers are female clients who are working at the bottom of the pyramid. They are typically engaged in small businesses like self-managed businesses, a kirana shop, or a small vegetable vendor, or an animal husbandry kind of a business. The typical end use of our loan is meeting their working capital requirement, or purchasing a livestock, or for the purpose of business expansion, or purchasing of asset, and often it was also used to repay the costlier debt that they borrow from another organized segment. We are a large microfinance entity among the top 3 in the category in India. We have a branch network of around 1,088 branches. And if you look at because of a branch network and because of our product offering that we have from the group stable, we have managed to retain 89% of our customers. So we have a very good retention ratio among our customers. If you look at our journey, we started off this microfinance business in 2010. That is when I joined the group. And since then, we have grown this business. We have raised capital at various junctures of time. We acquired a Pancharatna Security, which was a NBFC registered out of Mumbai, and we rechristened it to Muthoot Microfin Limited. And at the same time, we got the NBFC-MFI license since 2015. And in 2016, we raised our first round of private equity from Creation. Subsequently, we have infused capital from the parent side of around 220 crore. And recently, we have raised around 50 million in 2021 from GPC, and they did a follow-on round of 10 million in 2022. Today, we stand at around 8,200 crores of asset under management with 1,088 branch networks spread over 18 states and 305 districts. We have 2.6 million active customers. We have a CRISIL A stable rating long-term debt. And in terms of our ROA and ROE over a spread of like last 4 to 5 years, we have an ROA of around 3% and ROE of around 17%. We have a growth rate of around 46% CAGR, and we have a GNPA of, as of today, despite the COVID and all the impacts that we have had, it's around 3.5% GNPA, and net NPA is 0.9%. The most unique aspect about our microfinance operation is that we have a digital collection of 32%. And when we talk about digital collection, we are not talking about picking up money and processing it through a payment bank or something. We are talking about directly from the customer's wallet or customer's bank account into our bank account. That is 32% of our collection. I think the industry is at a cusp of major change that has happened by way of regulation. In March 2021, RBI came out with the revised regulation on microfinance. March 2022, RBI came out with a revised regulation of microfinance, which changed 4 very important things for microfinance. First of all, they changed the definition of microfinance, which is that they defined microfinance by defining it as any loan which is uncollateralized and which is given to a household having 3 lakh rupees of income per annum or below is categorized as microfinance. So this really changed the target segment for us. We were earlier regulated by giving only loans to household with 1.25 lakh rupees income in rural and around 2 lakh rupees in urban household. But now that target segment has grown to up to 3 lakh, even in rural. So it has grown from 1.25 to 3 lakh. We being a microfinance entity, which is mostly rural. So this creates a lot of room for us to cater to customers' need. This is another kind of a microfinance 3.0 moment. The microfinance 1.0 was before the Maligram committee, and after Maligram committee, there was obviously a rapid growth in the microfinance space. There were 8 NBFCs which were given SFB license, and there were one microfinance entity which was given commercial banking license, being Bandhan. And now, after this regulation, we feel that there will be another rapid layer of growth that will come into the microfinance space. As of today, microfinance ecosystem is around 3 lakh crores of asset under management and around 6 crore customer. And our assessment is that the market opportunities is almost 10 times this number and even more. And there are more households and need of the customers that need to be catered, and Muthoot Microfin is well positioned to kind of grow and cater to that need. We have seen all sorts of cycles. We have seen demonetization. We have seen Kerala flood. We have seen COVID wave. 1 and 2. So we have built a very resilient business, and all throughout we have grown. We have reported profits. We are a very well diversified portfolio. We are present in 18 states. Tamil Nadu and Kerala obviously are our key states where we have large amount of portfolio, but we are rapidly growing in northern states, and they are contributing more and more portfolio into our business. You can see from 2016 to 2000 today, Q3 of FY23, there has been significant contribution of the northern states which have grown. And we believe that in an ideal state scenario, we will have around 50% our portfolio in South and 50% coming from rest of the India. We have built a system which is end-to-end digital, from origination to underwriting to loan disbursement and collection is in digital format. This is all developed in-house. Our tech stack is very strong. We are leveraging on digital infrastructure that has been created by government in terms of using Aadhaar. We are using digital payment, BVPS, and everything to ensure that we have digital penetration. 100% of our disbursements are directly into the customer's bank account. Not a rupee is disbursed in cash. And in loan underwriting also, we have innovated. We have developed a credit scorecard model. And we look at the credit bureau check of all the customers. They are for each loan, there are 4 credit bureau reports that have been pulled by us. One is for the customer, the second is for the spouse, and one is on the MFI credit bureau database. Second is on the consumer credit bureau database. So we look at 360-degree of the customers' credit records. Going forward, once the customers start using this app more frequently, we feel that by 2025, we'll have 90% of our customers who have downloaded this app, and 85% would be transacting. It will help us eliminate a lot of risk and also help us reduce the operating cost from 6.3%, which is currently, to around 4.5% in the future. How we are going about this digitization, we have a concept called Adarsh branch. And if you look at on the slide on the left bottom side, these are the number of branches where we are 100% digital in terms of collections. So 128 branches where every single penny is collected in the form of digital format, nothing is collected in cash. And around 145 branches where 90% of the money is collected in digital format. And this digital penetration is growing rapidly. You can see that from the slide, from the graph at the center bottom corner. It is growing every month. From 24% to 32% of our collection has gone into digital, which means almost around 150 plus crores we are collecting in the form of digital collection. On the book side, as of December, 84% of our AUM is represented by the book that is originated post-COVID. And in that book, we have absolutely perfect collection in terms of 0.89% of 0 plus overall book and around 0.26% of NPA. Our concentration side also, which is reducing. We were at initial stage around 49%, 32% in Tamil Nadu and 25% in Kerala. That is reduced to around 29% in Tamil Nadu and 20% in Kerala and 9% in Karnataka. You can see the growth is coming from our northern states and eastern states. We are not there in Assam at all. But we are there in Odisha, West Bengal, Chhattisgarh, Jharkhand. Those are the states which are contributing to the growth. And in terms of our collection efficiency, month on month, it is improving. You can see that our collection efficiency has already reached around 97% cumulatively. And on our on-time collection has reached around 95%. And 2% overdue collection, which is resulting in 97% collection. But if you look at the collection, which is from the overdue account put together, we are more than 100% collection for the amount that is due. If you look at in terms of our PL ratios, our net interest margin is improving. For the Q3, our net interest margin is 11.7%. Our cost of fund, including everything that our equity and everything that we utilize, is 7.8%. And our debt, our OPEX ratios are 6.3. And with the increase in AUM, definitely those will come down. We feel that by end of this financial year, it will come down significantly. Most importantly, our ROA has gone up and our credit cost has gone down. The credit cost has gone down from 3.8% to 1.9%. Which will definitely help us report higher profitability. That's why the ROA has gone up to 3.8%. Our balance sheet is growing quarter on quarter, year on year. If you look at our balance sheet has grown consistently, and our capital adequacy remains robust. We have around 23% capital adequacy, and leverage is debt to equity is only 3.7 times. Even if you look at AUM to equity, we are at 5.4 times. So we do a lot of direct assignment. So a little bit of 20% of our portfolio is direct assignment. So our leverage is around 3.7 times. And in terms of our portfolio quality, it is improving drastically. We had a peak delinquency of NPA of 10.7%, 10.07%. It has come down to now 3.5%. We anticipate this to go down even further.
So with respect to the funding side, Muthoot Microfin has drawn around 25,590 crores over the period of operations. And in the current financial year of 9-month ended 9-month December, we have drawn 5,052 crores. And as of now, we have around 61 active lenders. This is excluding the NCDs, which has been subscribed by the retail and HNI category. This is the major lenders that we are talking about. And in the current financial year, where we have borrowed around 5,000 crores, we have added 15 new lenders into the company. And we have used all means of funding, where large portion of our funding is given by the public sector banks and followed by private sector banks. And we have a large composition of good DFIs like NABARD, SIDBI, Mudra, etc. is lending to us. And we are currently adding a good retail and HNI network through our NCD issuance as well. And if you look at the medium of funds that the fund availed through various means, 44% is through term loan, and around 12% we raised through NCDs and MLDs, and around 4% through ECB. And 21% we have raised through various assignment that we have done with various banks, and around 17% we have raised through PTC, again structured transactions. So with respect to the funding, there is no issue on the company side, and all the funding that we have raised is without any specific corporate guarantee or personal guarantee of our promoters, or on the performance and the ability of the company, the funding has been raised. So with respect to the cost of fund, it is coming down consistently. We are at 10.8% cost of fund. This is including all the negative carry and all the cost associated with the borrowing. This is despite we seen a almost 200 basis point increase in the base rate at the various banks. But what we have seen with respect to Muthoot Microfin in the current financial year, we have seen only 34 basis point increase in terms of cost of fund, and we expect maybe another 10-15 basis point increase in the coming periods, but not beyond which. And we are having very strong liquidity over the periods. We are managing around 600 to 700 crores free funds at every quarters and then financial year end, which is adequate for our operation. And as of December, the overall borrowing of the company is 7,500. In that, around 1,800 crore goes as an off-balance sheet borrowing, and the balance is the on-balance sheet borrowing that we carry in our books.
Yeah, I'll take this up, Praveen. So this is one of our new initiatives. This is the e-clinic facility that we have created at our branches. So this has come about from our experience of understanding our borrowers. So we did an extensive survey during our COVID period, and we understood, and even after that, we understood that the top priority of our customer is first health and safety of our household. Second is the education of the child, and third is the financial stability of the household. So, since health is the top priority of our customer, we thought that we need to do something about it. Hence, we have tied up with a company called MInsure, and we have created e-clinic within our branches. So these are facilities where customer can come in and do the consultation with the doctor through a virtual mode. There is an Anganwadi lady who has been trained. She does the preliminary checkup, and then she facilitates a call with the customer, just like an urban setup. People do it in a Practo or something like that. That call is kind of facilitated with a experienced and qualified doctor, and the doctor assesses the customer and provides the prescription. We feel this is important because this is a very important relationship, not only from customer retention point of view, but also we have experienced that in a rural household, the biggest impact on the financial well-being or the savings of a household are any sort of a medical emergency. So this is a kind of a preventive technique where we can prevent any sort of a health event in a household where we are lending. And by virtue of that, we will help them save money. And once they save money and their job continues, they will be able to repay us on time. So that is a win-win situation for all, and this will be a deep impact. This is a program where we charge 250 rupees as a subscription model, and within that 250 rupees, the family of 5 can consult the doctor unlimited number of times in a year. So this is a facility which is really appreciated by our customers, and this is something we feel will make a huge difference going forward. Overall, I think to summarize, I just wanted to say that this is a great opportunity for microfinance because there is a growth which is coming in microfinance. There is credit growth, and there are opportunities to do more and more products to the customer. Plus, the rate deregulation has allowed us to improve our yields on the portfolio, so the profitability is improving from there. And from an entity side, we can tell you that a lot of digitization is happening, and we are rationalizing our operating cost, and that's why there would be a great amount of improvement in the ROA on the portfolio. And we as a microfinance company are very well positioned to take advantage of that because we have a very established brand name and experience of dealing with this business for a very long time. We are a large microfinance entity, already the third largest player, hoping to be the number 1, number 2 player very soon. We have best-in-class technology. We have in-house technology and ability to really rapidly pivot. We have a resilient business model. We have seen multiple cycles of events like Demon or COVID or any sort of a cyclone or flood that in Kerala that we have seen. We have a very well managed board. We have a strong governance model. Hence, we are very well positioned to kind of take advantage of the regulatory change and the environment that we are operating in. And definitely, we will help in taking the financial inclusion and digital inclusion forward. So that is why I think anybody who is looking to look at the sector of microfinance should look at Muthoot Microfinance.